Today's news is a reminder of how quickly things can change. Just look at what occurred in the financial system with Silicon Valley Bank and others that began to have a domino effect. Some industries right now are booming, others are struggling to keep up. And it has been a difficult time for everyone. So that's why we need to stay on top of this so that we can be aware of all of it to make the right decisions for ourselves, our families, and our investments. Now, the first section here is really about the oil and energy markets. We've seen a lot happen recently, but I think it's important to cover this information right here. In fact, the first segment in here is really talking about OPEC, and they predict that Chinese demand for oil will continue to rise, but that's going to be counteracted by the weak demand in Western countries. And so this balances out. Just look at what's happening with Europe. They're looking weak. It is, in fact, the worst position globally right now due to demographics, the growth prospects there, inflationary pressures, and so on. This has led to a decline in oil prices and created instability in the market. I'll show you the charts on that in a second. At the same time, Saudi Aramco, which is the state-owned oil company of Saudi Arabia, well, they reported a significant increase in annual profit due to high crude oil prices. Any country that was exporting oil during these times did really well. Exxon's new Texas plant is also likely to be the last major refinery project in the US due to the shift towards renewable energy sources. A big issue, in fact, for oil, because it looks like it's being put out of business. And that's not a good sign for so many of the jobs that are involved. Will people be retraining and retooling? Let's talk about that. All of these developments are reshaping what's happening within the energy landscape, and we've got to keep an eye on this. Look, you could see it for yourself. OPEC sees weaker Western oil demand countering growing Chinese appetite. So they kind of balance out. You could see it here that oil declines as SVB collapse reverberates through the markets. There has been all these other companies as well that have come up, and who knows, by the time you're watching this, so many of the big companies, they might be affected as well. You could look at some companies, though, they did extremely well. And just to take an average over the last several years from 2017 up until 2021, it was way above that. Prices were elevated. And of course, inflation was too. Saudi Aramco did very, very well, from my understanding. This is basically just talking about a 5-year, $2 billion project, making this one of the US biggest. CEO Wood's counter-cyclical investment approach is paying off. Now, I think you look at a lot of these companies right now where they're worried about investing, and for good reason, because they don't see a future in their own industry. Do you see that? It's the same thing that happened with coal. Now, coal needed to be used up, and just about every country started implementing more coal because they said, uh-oh, suddenly that thing we tried to bankrupt is very useful. And no new mines were put in, so the prices, of course, went up as a result. Okay? US crude slips below $70 a barrel. This is what we talked about, and I think it's important to see that, because at $70 a barrel, we are definitely showing weakness compared to where we've been. We've been really bouncing around that $80 a barrel for quite some time, it seems. Well, in the next segment, it's on the banking and financial markets. And the recent collapse of Silicon Valley Bank, SVB, has had a ripple effect on the markets, and that led to a decline in bond yields. So like what return you can get from a bond. And that created panic. Of course, you see the effect that it had on Bitcoin, on bullion, gold, right? Investors were seeking safe havens. For some people, they were turning to gold. For other people, they were turning to Bitcoin. It's an interesting thing right now. Well, the former Fed of the FDIC, he actually said that more bank failures are likely to occur after all these events. Bank of America, on the other hand, has gained more business from SVB's former clients after the bank's collapse. You see, I told you that there's always going to be a winner. One of them was JP Morgan that I brought up previously, but also Bank of America too. People are worried. They're saying, you know what, maybe it wasn't a good idea to put my money with those smaller banks, the regional banks, and I'm going to go to the big boys. And that's what they did. This is very concerning because there's consolidation that's taking place just about everywhere. Zealand Pharma expects to recover all of its SVB deposits. A drug developer has 15% of its cash at the now closed bank. Yeah, they're going to make them whole. That's what they say, but does that resolve the issue? Of course not. You want your money. People they're trying to make it seem as if nothing's wrong here. I want my money. Okay? Show me the money. After Silicon Valley Bank failure, there's going to be more. This is from the FDIC, the former FDIC chair. I mean, this is big. It's not just some analyst. You got to look at all these things. When the big banks win, it's not a positive development. Goldman Sachs cut the GDP forecast because of stress on small banks, which are key to the US economy. All small businesses are key to the US economy, are key to any economy. Small business make things happen. They're the ones that ultimately make up a large majority of the jobs. And yet, they always get the short end of the stick. Look at all of the bailouts. Look at where all the money goes. It goes to the big institutions. They're the ones that have the millions and billions of dollars to lobby their friends in Washington. Isn't that how it works? Right. Of course. First Republic Bank cut to junk by S&P, Fitch, amid bank turmoil. This is going on. I mean, come on. You realize this. You know the writing's on the wall. A lot of these companies have gone down. Now they're being bailed out. They're going to have some sort of receivership. They're going to split up their debt and repackage it and all this garbage. Doesn't save the day. It just papers over it. BlackRock chief warns SVB collapse, merely the first domino to drop. We're talking about major institutions talking about how bad this actually is. Biggest plunge in bond yields since the Volcker era on bank fears. Look at that. Imagine you were getting, let's just say 5%, and now you're down to 4%. This is the financial conditions that they're showing. But the point is, you were getting much more yield from a bond, and now that is no longer the case. Things have really changed rapidly. And this is just showing us the credit default swaps, basically showing how much risk there is. When you look at it, Goldman Sachs, Morgan Stanley, all the bigs, okay? And of course, the risk has become higher. Not as high as, let's say, Credit Suisse, but we've seen that ultimately for a lot of the big boys, they are looking more and more risky, okay? Big stuff right now. And I think it's important to just highlight what has happened here because you see the risk and it hasn't been dealt with. Financial companies have their own issues, and these are ultimately deflationary, right? But look at the other side of this, where they are inflationary. Why would I say that? Why would a collapse of a bank be deflationary? It's because of the effect that it has. You see, they're not going to actually allow these multinational conglomerates and massive multi-billion-dollar companies to fail. They'll let them collapse into something else. You see, JP Morgan, Bank of America, they're all going to take their piece and they get to benefit from it. All the while, there's going to be cash thrown out there. And that cash is devaluing, diluting the total pool of existing money out there. And so you get an inflationary effect, unless they're going to let everything collapse. They're going to let all of them fall down. Are they willing to do that? Do they ever do that? Not really. They pick and choose, certainly. There could be some companies that just completely collapse, that's it. But the industry as a whole, multiple big banks, billion-dollar banks, I just don't see that. And so that's the way that this has been unfolding. And that means your money's being devalued. That's what it means. Inflation, money's being devalued. As a result, you need to hold on to real assets. I plan on doing a video about this that I'm working on. Essentially, what do we do? If we don't trust the banks, what do we do? One of those key components is having real assets. Or, if you want to take it a step further, right here or right here, the pillars of prosperity. Just do a search, The Money GPS, pillars of prosperity. You'll get that video, and I talked about what you need to know in there. So I'll see you in the next one. Take care.